Let's bring in Paul Nolte. He's the Senior Vice President and Portfolio Manager of Kingsview Asset Management. Paul, welcome to the show this morning. I was hearing a wide range in terms of consensus on this one, but it looks like it beat even the top line estimates.
Yeah, it did, and ours was actually a little bit below consensus based on inventory build. So without really getting too deep into the numbers, we haven't had a chance to review those yet. It was a huge surprise. And of course, down here on the floor listening to the groans and cheers as the number was reported. We saw a huge move in the equity market as well as the fixed income market on the back of that number. And it points to the fact that what we've been seeing so far for the last 4 months, since the beginning of the year, and even a little bit back last year, the U.S. continues to be the cleanest shirt in the dirty laundry. Our growth is certainly above what we're seeing in Europe, better than what we're seeing out of a lot of the Asian countries outside of China, and in the emerging markets with some of their issues in Argentina and Turkey, et cetera. The dollar is reflecting that, and the equity markets are number one again this year relative to the rest of the world.
Yeah, they sure are. I mean, we had a new all-time high in the NASDAQ this week. We've seen the SPX with a new all-time closing high, new all-time highs as well. Now, Paul, I want to talk a little bit about how the indices are seeing a nice bid reaction to today's number, but I'm wondering if there may be a little trepidation there. They've yet to take out the highs yet. Now, obviously, we just got the number. There's a lot of trading day left, but I'd imagine at some point, I mean, if we start to see really robust numbers like this, we're going to start to hear talks of how, again, we could maybe be seeing rate hikes at some point.
You know, that's the Goldilocks issue that we have right now. You know, many consider us in that period right now where it's not too hot, not too cold, and the Fed is comfortably on the sidelines. But you're right. If we do wind up seeing some really strong numbers here, employment next week, and certainly the Fed meeting next week, we could see the Fed come back in. Right now, they're pricing in a rate cut late this year, early next. That may come off the table here if we do see those stronger economic numbers. But it also begs the question, if the U.S. is doing so well, why is not the rest of the world doing a little bit better? So we're not an island here, and we want to take a look and see if there's more to these numbers than meets the eye, and I think we'll be able to sort through that over the next half hour or so.
Yeah, you know, you bring a good point to the discussion here in terms of we're not an island, we're not isolated, and at some point we're concerned a little bit about that ripple effect. But Paul, talk to us about the Treasuries. It's kind of a quiet week for the most part. It appears, though, as if we've been watching the bonds for the most part hang right around that 147 handle, and again, just not a lot of real well-defined directional conviction here in rates and in Treasury futures products.
No, you're right. It's been an interesting sideways pattern. And really, when you look at the short end, it's been flat. Really not a lot of change. 10-year has come back from close to 3. It's come back down. And 3 is kind of that magic number. It was hanging above that for a while. Now we're well below it. And that's going to be, I think the 3% level is really the point at which the equity markets get a little bit more concerned. And certainly what we're going to be looking at as far as the Fed is concerned as well, and inflationary pressures maybe in the second half of the year. So that 10-year bond is going to be one to keep an eye on. But you're right, it's been really very flat. The steepness of the yield curve been stuck here in the mid-teens, maybe low 20s, not going anywhere. So not a lot of indication from the yield curve as far as where the economy might be heading, or even where the Fed may be heading.
Yeah,
but, do keep an eye on that 10-year.
Paul, I'd imagine this is kind of what you'd expect to see. It just looks like dust is kind of settling after that major shift, that abrupt shift that we saw in terms of Fed sentiment.
No, it's true. But, I mean, you look at the comments that we heard from the ECB, from Switzerland, from the Bank of Japan. Everybody else is saying, hey, we're just going to do our own QE here, or we're going to be on hold. So I don't know if the U.S. was late to that party.
Yeah.
Excuse me. But they're there now.
Paul, it's not uncommon. I often have that effect on our guests. They get all choked up when we start talking about some of the impact that price activities had. Paul, let's move on. Let's talk a little bit about next week, because everybody's dialed in on earnings this week. Everybody's dialed in on today's GDP number. It's out. We saw it was a huge beat, over 3%. I'd imagine the focus is going to start to shift to the Fed and the strong dollar and jobs data next week.
Yeah, it's going to be a huge week next week, and certainly now with the Fed, they're talking about a conference call each week or each meeting now, so we'll get more Q&A from Powell. We may be able to dive a little bit deeper into what the Fed is really thinking. Big unemployment number on Friday, so we're going to be shifting now to economic data. Usually the first 5-10 business days of each month is pretty data heavy. Big market mover potential. So we'll shift away from the earnings and start taking a look at that. Again, what we were looking at the Fed, was going to be kind of interesting too, is what we're seeing in the makeup of the Fed right now, are those voting members. Yeah. Very diverse group. We used to be seeing pretty much everybody fall in line, and then when they talk around in the rubber chicken circuit, they were all in line. We have a very wide group, so it's kind of hard to really nail down the Fed without talking about the individual members.
Yeah, a wide range in terms of the members, but we haven't seen really anyone dissent for the most part for the last few meetings, it seems like.
No, I think they want to provide a solid front when they do report what they're going to do with interest rates. Yeah. But certainly when you listen to them talk on the circuit as they get out and talk about the economy and interest rates, there's a big difference.
So, Paul, one more question. You mentioned how the dollar, or the U.S. economy, is the cleanest shirt in the rack or in the hamper, so to say. But talk to us a little bit about the strong dollar, because for the most part it's been really ignoring rates, which have been very limited. But at some point it would seem like that's got to resolve. I mean, you mentioned again where some of the strength we're seeing in the dollar is coming from more weakness in the currencies, but ultimately rates in the dollar, that divergence, I mean, this is significant and it will resolve.
Yeah, it's been one of those things that's really created a lot of head scratching around the U.S. and around portfolio management as well. This is not what should be happening. Yeah. We should see a little bit weaker dollar, certainly given what we're seeing. But again, going back to the economic data, going back to what we're seeing from the global economy, and certainly the softness that we're seeing from central banks around the world, it makes sense that the dollar is a little bit stronger relative to the rest of the world. It will create problems for the multinationals. It will create problems for our trade. But that's a discussion probably for June or July. But it's something to keep an eye on if the dollar continues to creep higher. Yeah, and even this GDP number, Paul, gave it a little bit of a lift. Now, it's back down below the 98 level, but they did spike on. It's certainly adding support at the very least. Traders, that's Paul Nolte joining us. He's the Senior Vice President and Portfolio Manager at Kingsview Asset Management. Paul, have a great weekend. Look forward to seeing you back here in the near future.